Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, I want to look at a stock that a client has asked me to look at, and it is CRK, Comstock Resources, aka the natural gas company that Jerry Jones is affiliated with. Jerry Jones being the owner of the Cowboys. Let's look into whether this would be a good stock to hold in a portfolio. Would I recommend this stock to my clients, for example? If you learned something in this video, would love to hear about it in the comments. If you have any other thoughts, if I'm missing anything, would love to hear about it. Hopefully, you learned something about how I think about companies, and that can potentially bolster your conviction for this company or other companies, right? You guys know mostly on my channel so far, I've talked a lot about GameStop stock. Not a ton of similarities here with CRK, but a very different type of company. Excited to get into it. Let's get into it. So, CRK on the jump, let's just look at the high level metrics. So, this stock in February of 2000 was at $21 a share. Now we are here 26 years later, and it is at $21 a share. So on the jump, I would ask anyone, how would you feel if you held a stock for 26 years and got a 0% return and no dividend, right? So it's not like you're even getting a dividend yield from that. Genuinely, you would be flat after holding for 26 years. You probably wouldn't be that happy with me if I stuck and held that in your portfolio. Or let's say you bought in 2006. Oh, it's $150 a share. 2007, $150 a share, right? 2010, $150 a share. 20? Yikes. An 80% loss despite 20 years of time going by. That is not good from a stock performance perspective. So, already a huge red flag, huge speculative name. Now, you might say, hey, but that was all in the past. The past is the past. What about since Jerry Jones has gotten involved? Well, Jerry Jones disclosed his involvement at the very end of April in 2018. So if you were to just look since then, right, let's say you bought after that announcement in May of 2018. Let's see here. It was at $11.50 per share. So 8 years later, today in 2026, you would have doubled if you bought on the news that Jerry Jones is financially backing Comstock. You're buying into the future vision of Comstock. You would have doubled over those 8 years. Now let's compare that to the S&P 500, which is up 400% in the past 26 years. So more than 10 times higher than Comstock's return. But even since May of 2018 is up a time and a half. So you would have doubled in Comstock. If you had just bought the general overall market, you'd be up 2.5 times. So from a stock performance perspective, this has historically underperformed, which generally should tell you this is a higher risk stock. This also does not pay dividends, whereas the S&P 500 actually does pay some type of dividend yield. Maybe it's like 1% or 2% on the whole SPY. Anyways, what else do I want to highlight on a high level? PE ratio, super high. So this company is valued very richly. I mean, very, very richly, right? The S&P 500 right now is at a 28 and Comstock is at a 93. So basically almost 4 times as expensive as the S&P 500 despite a historical track record of underperforming the S&P 500. So what's going on, right? Why all the why all the rich valuation for a historical lagger, right? For a non-dividend yield paying energy company. Is it that insiders are buying it up? Look at all these buys, huge purchases of shares. Well, actually, no. So I looked at all these SEC forms. These acquisitions are stock awards that are vesting. Okay, these are not actually purchases. Insiders have not purchased this stock with their dollars. They are being gifted stock through their comp plans. And in spite of that, there are a couple disposals, right? Mr. Burns, he sold 26,000 shares. So the CEO and the CFO both said, "Yeah, I'm good. I've got enough shares. I'll go ahead and sell. Thanks." So insider signaling, not super exciting. So, what is the reason for the high PE? Well, basically, let me dive into the narrative and then I want to get into the financials. The narrative is, according to this headline, there's $100 billion gas bounty, right? They bought a bunch of land. They took Jerry Jones' money back in 2018 and said, hey, natural gas is at such a low dollar rate right now. You can read this whole article, but natural gas falls to $2 and Jerry Jones is sending you money. So what do? Do you drill and sell more natural gas? No, you start buying up natural gas property, right? Just since natural gas isn't paying that much right now, let's get a bunch of property and then we'll start pumping out the gas once prices are higher and we can start making a lot of money. So that's what they did starting in 2018. The thing is, well, let me just one thing at a time, okay? So that's what they did. And so that's the reason why the PE is so high, the reason why the stock is over the past 5 years performed quite aggressively is due to the fact that they have been for the first several years buying more and more land, and in the more recent couple years they have started drilling and started reporting some of their findings on some of the new land that they have drilled. So that's the upside narrative is that Comstock is sitting on a gold mine worth of natural gas, and you better buy in now before it's way higher, right? Another conversation that's often viewed as an upside is the fact that Jerry Jones owns 70% of this stock. So it is what's generally called highly illiquid. But get this, 37% of the stock is short. So literally every available share that Jerry Jones doesn't own, right? Or you could even say greater than the amount of shares that are in the what should be available float, right? Because Jerry Jones isn't short his own stock, right? But some like every institutions are bearish on this company, right? So if you wanted to say, hey, CRK, there's two different moonshots with CRK. There's the moonshot of what if they start making a ton of money on their natural gas reserves that they are now starting to drill. Moonshot number two is what if there's a short squeeze? And what could cause that? Who knows? The thing is, it's not exactly a very public facing name as it relates to a meme driven, a retail driven short squeeze. Um, And high short interest usually is a bad sign. When you're thinking about a fundamental value, when you're thinking about buying into a company at a valuation that's attractive and the company should outperform over time, usually you would want to buy a company that most people, after analyzing, think this is a good company. You wouldn't normally want to buy a company that says, you know what, everyone that can bet against this company is betting against this company. Or, in other words, every share that can be bet against is being bet against. Why would that be the case if they have $100 billion of a gas bounty, right? Why would they be betting against the firm? The financials tell the story, and on a balance sheet perspective, this is in thousands, not in millions. They have $19 million in cash, and yet they have well over $3 billion in debt. 19 million in cash, 3 billion in debt. They have a lot of assets that are in the earth, but you have to get those assets out to extract the value unless you're going to sell your earth. But if CRK needs to sell its earth to raise cash, then the entire bull thesis is gone. Because the whole point is look what we've got in the earth that we can get out of the earth and sell. They don't have $100 billion worth of gas, or sorry, they don't have $100 billion worth of earth. They have $100 billion of retail value of natural gas if they can get it out and sell it for that. That's what they have to do to turn that asset into cash. But here's the problem, it costs them more right now to get the stuff out of the earth than the money that they can make selling the stuff. Are you tracking with me? When you look at their cash flow statement, so they have an operating profit, which is, there you go. There's some net income. There's some operating income, which a year ago at this time they didn't. So they're starting to make some progress. They're potentially heading in the right direction, right? But when you look at their cash flows, so here's their operating cash flow, right? The problem is the capex is higher than their operating profit. In other words, the cost of the continued exploration and drilling to try to figure out how much well, how much property are they ready to start drilling on? How much do they have in the ground? What's the best process to get it out of the ground? It costs them more than the money they're making from natural gas. So they're actually burning, potentially. I mean, they did so far, and this year, they could again be burning upwards of 300 million in cash. They've already raised more debt in the past year, right? That's what they did here. Let's just get another 200 million in debt. No problem. Until it actually is a problem, right? They also sold some assets, right? They're getting rid of everything that's not this, whatever it's called, Haynesville, uh, East Texas property that they're drilling on. They're getting rid of their other properties, doubling down, tripling down on the property that they're trying to develop currently. Yeah, Haynesville. But they don't have, like, they still are not making cash, right? There's a cash pinch. They're burning cash faster than they are making cash still. And it could be multiple years before this changes. It could be multiple years before they are actually cash flow positive. I don't want to read through these whole articles with you guys, but this analyst thinks it's probably another year or two of cash burn. How much more debt can they take on in light of the fact that they don't have any money? It's a good question. Another big factor that's out of their control is the price of natural gas. So it's cool that you can start buying up a bunch of land when price is low, right? That's a great strategy. But if prices are still low 10 years later, and if the technology, if the ability to utilize energy is higher now than ever, if the cost of energy is still very suppressed because we're getting better at extracting it and generating it, then how do you know that prices will come up enough to make this the cash cow that you want it to be? If it costs you $105 billion dollars to sell $100 billion, dollars, then guess what? Your company is basically worthless, right? The value is in the margin, and Comstock doesn't control the margin. It's just like a metal miner. It's like a pre-profit company that says, "Hey, I have all these assets that are worth so much money and we're fixing to sell it." But we can't actually control what we sell it for. We don't know how long it's going to take until we are profitable on a cash basis, free cash flow positive. It's unclear how long that's going to take. It's unclear how much cash we're going to have to spend to get there. And by the way, these wells are the hottest, deepest wells in the US. It is unproven that they even will be able to efficiently extract this natural gas. And look at this quote from Jerry Jones. Where is it? In describing, look at this. He talks about how the harder part is getting it out of the ground economically, like I just said. Look at this quote. I never thought we were betting the house, right? When he invested back in 2018, he never thought that they were betting the house. But guess what? He has already spent more than $1 billion dollars on Comstock stock. He has already sent more than $1 billion to Comstock, and still they're out of money. Guess what? Jerry Jones is not that rich. Like, he can't. It turns out, what's another way of saying this quote? It turns out I am betting the house on Comstock. Right? He is at risk of having to sell portions of the Dallas Cowboys to fund this Comstock exploration. The bearish way to describe his ownership interest, because it's that debt ratio, some people feel is less concerning, even though it's much higher than other natural gas companies. Some people feel that, hey, the debt's not that big a deal because they have Jerry Jones backing. And also that because Jerry Jones owns the majority of the shares, that also is a mitigating factor or a helpful factor for the stock. But think about it. We already talked about how the stock has performed, right? It has dramatically underperformed the S&P 500 over a 5-year term, or sorry, since 2018, right? Since Jerry Jones has gotten involved, or over the past 25 years. And that's despite the fact that Jerry Jones owns 70% of this pie. Another way to say it is like, why don't more people want pieces of the pie? Right? Like, or if you're holding so such a high concentration of the shares, why aren't the shares more valuable? You should be able to, if to go to Ryan Cohen for a second, if Michael Burry comes out or if Ryan Cohen comes out and buys $1 billion worth of this stock that has an enterprise value of 3 billion, right? The market cap less the net cash, then that hypothetically should have a dramatic upside to how the stock reacts to that. With with CRK, it's underperformed the S&P 500 despite 70% of the stock being purchased by Jerry Jones. And by the way, Jerry Jones is 84 years old. So who's to say he won't sell some of his stock? It cuts both ways, right? If Comstock is a good buy because Jerry Jones is involved, well, first of all, are you sure Jerry Jones is going to sell the Cowboys to keep financing Comstock? Because they're going to need more and more financing, you know? And secondly, if Comstock hits it big, do you think Jerry Jones is going to keep retaining 70% ownership interest? Probably not. Like he probably would sell. And if he's going to sell, because by the way, he's 84. It's like, what am I trying to say? He he would rather have the money, especially if he has to put more money into this. He's already approaching, net worth with rich but cash poor because of how much cash he's had to put into this business. If he gets even cash poorer, it almost guarantees that he will sell it or at least sell significant stakes. If he sells significant stakes, well, that has a dramatic impact on the dynamics of the stock because even if he only sells 20% of his personal stake, the total amount of shares available just increased by 70% because he currently holds 70% and there's only 30% available. If 30 turns into 50 or whatever, it's like, holy smokes, that creates a huge downward pressure, right? Him retaining such a high concentration should put upward pressure on the stock, but the stock has not shown that upward uh, trajectory, at least historically. In the past 5 years, it started to push up, but the excitement has dwindled as each quarter has gone by with more and more cash burn and less clarity on the energy dynamics globally. One of the um, one of the bull cases for the natural gas industry is related to exporting. Which one of these articles talked about that? The move by North America to export natural gas. The hope is, hey, even if natural gas stays cheap, stays affordable in the US, maybe the US could sell its natural gas to other companies or to other countries at a higher rate, right? Because other countries pay more for their natural gas. Well, that's true, but if we're in an economic war with other countries, that might not work. And also, we might flood the rest of the world with natural gas. It seems like I'm not a natural gas specialist, but based on the articles I've read looking into CRK, like it seems like there's a lot more natural gas available and already in storage. Like we have a glut of natural gas currently. So again, is that 100 billion really worth 100 billion? It's like saying you've got 100 billion worth of sand. It's like, well, yeah, except no one's going to pay for it because everyone can get sand, you know? Like if the price of the commodity of natural gas remains depressed, the upside of CRK fundamentally remains super low. If the concentration of Jerry Jones' worth, Jerry Jones is in a lose-lose here. Well, of course, it could win. Like Comstock could pay off fundamentally, but even then, you're looking at 2 to 3 years from now before you actually see what those numbers really look like. Right now, their capex still exceeds their income. So this number is probably going to get even worse. What I meant by the comment of Jerry Jones is in a lose lose is if he does nothing with his stock, then there's no real momentum, right? If he sells his stock, it's a huge downward pressure because the portion that he owns of this company is such a high concentration. If he buys more of this stock, it might create even more downward pressure because it would probably be a confirmation that they need more cash. Right? If he's sending more money to the Comstock Bank, I don't know if people right now would view that very positively in light of their financial position. And of course, if he sells, it would not be viewed positively. To me, CRK, it's it's very speculative because they're basically putting all of their eggs in this Haynesville exploration, which also geographically is a huge concern. Sometimes I talk about, or with other companies, people like to talk about what if a meteor comes, right, and blows up a GameStop store. It's like, okay, great. It doesn't really matter. You could take all the stores. It's e-commerce, like, oh, what about a distribution? Okay, we have several distribution centers. Like it doesn't the physical risks of other companies that are well diversified in their footprint is not really even worth the time. Obviously, you don't expect anything to happen in Western Haynesville, but the reality is everything that Comstock is worth is there in Western Haynesville. So, like, if some type of natural event happens that prohibits them from extracting, if the technology also, by the way, for extraction doesn't improve, which is something they were talked about here, like finding ways to get the the natural gas out of the earth efficiently. What am I talking about? Geographical risk. Comstock is screwed. If something happens to this, they're screwed. If some military event happens, if some like their value is very concentrated, and I don't think Jerry Jones is happy when he says, "I didn't think that I was betting the house." I think he's saying, "Golly, I turns out I'm really betting the house on this thing." Well, it better stinking be right, but historically, this stock has been wrong. So again, this is kind of a technical play because there's a lot of projection involved with their own capex. Like, how much more spending is it going to take to actually get to a point of efficiency? What's going to happen geopolitically as it relates to global demand for North American energy exports? What's going to happen with natural gas and its current oversupply status that seems like even an oversupply globally status? What happens to the price then of natural gas, and how much lower could it get before they're not even making money, period? Right? We saw just a year ago they were at an operating loss, right? So they're kind of threading the needle on, do they even have net income? That's before we even factor in their capex. You know what I mean? So, how do you feel about natural gas and the future value of natural gas? If there really is that much natural gas still in the earth, it's hard to, which, some of the bullishness, I think this article talks about, there's um enough gas in this Haynesville project to fuel like 25 years of our current energy output. Which again, that article is saying it in a flowering way, but I'm like, if one deposit of natural gas can fuel 25 years of American energy, like how how much natural gas is there, right? Like it just kind of seems like I don't know if this is the commodity that you want to be hyper leveraged for. And it is hyper leverage. 3 billion in debt, 19 million in cash. Burned 300 million in cash last year. Quite potentially going to burn 300 million in cash again this year. Of course, they can keep raising more and more debt, but that's more and more risk. That's more debt that still has to be paid off. Jerry Jones cannot finance this thing forever. If he sells the Cowboys and then dumps 13 billion into Comstock, that would change things dramatically because it gives them a huge runway. But that would be very painful for him to do, and I don't know if he's interested in that. He can't really sell the stock to raise his cash because that'll tank the stock. It's super highly shorted because it's super highly at risk because there's a lot of unknowns globally, natural gas supply wise, and their own execution, right? Their own capex and their own efficiency. There's just a lot of projection in this company. I would not recommend it as a portfolio holding for those reasons. If someone wanted to gamble on Comstock, there are two triggers to meaningful upside. One is related to their uh like extraction and sale of natural gas. The other is related to a short squeeze. A short squeeze is probably more likely because the extraction will happen more slowly over time. And even if they execute, here's the thing, what I want to end with. Even if you say, well, I think Comstock is going to execute perfectly, even though historically this isn't a company that does that, but if you said they are going to execute perfectly, you're still talking about something that is 3+ years away from printing cash compared to opportunities that are already printing cash or speculative opportunities that are going to start printing cash much sooner. Like, for example, Tesla is a speculative name that I really like for my client portfolios. Tesla's like, hey, we're done making the Model S and X. We're going to start that factory line as a Optimus robot factory line, and we are going to start selling them this year and ramping to 1 million per year in production And by the way, we can control what we sell it for. Natural gas, you can't control the price. By the way, we also have a software subscription to operate the robot. So we have a recurring revenue on top of the profit from the product. You can't do that obviously with natural gas. With natural gas, you don't have a business, you only have the resource, and then you just make money when you sell the resource. But in Comstock's case, they haven't even proved that they can profitably extract the resource. And so even if they execute, even if they solve that, they prove that they can do their part efficiently, they still can't control what they sell it for. So they still can't guarantee high execution, even if they execute their part well, because they can't control the global demand for natural gas or the global pricing for natural gas. They can't sell natural gas at a premium, right? And again, even if they could guarantee that, you're still talking about 3+ years away. And if you're talking 3+ years away, it's probably not something you need to rush into. It's probably a energy name to look into in another year, or and then in another year, maybe in another year, right? Like, when do the numbers finally start to make sense? Energy as a speculative investment is not my favorite way to speculate because there's so much outside of the company's control. Whereas a development or a tech or a turnaround opportunity are those are easier names for me to analyze and then make a speculative investment on because much more of the pie lies within the company's control. So, those are some thoughts that I would give on CRK. An interesting name, not something I'm super familiar with as far as very upstream oil and gas exploration companies. So, if anyone has any expertise, want to drop any extra thoughts in the comments, would love to hear it. All right, that is all I got for you today. I'll see you in the next one.